Well, Friday's price action for Bitcoin has put people in a lot of FOMO as all three sessions on Friday ran a trend to the upside, which ultimately trapped us into the weekend where we have been consolidating ever since. So in today's video, I'm going to discuss the price action. We're going to start from macro because it's been a while since I've done a video for you guys, and we're going to work our way down to try and work out what we can expect for the week ahead. If you are new here, welcome. My name is Annie and this is 𝗟𝗶𝗃𝗵. If you are returning, welcome back. Be sure to smash that like button nice and early as it really does help us get our videos around the internet. Now, before I get into it, just want to say, hey, what's up? I know it's been a while since I've done a video. I actually took a few weeks off to go home to Australia and visit my family. And I knew that this time in the market was the best time for me to be able to do it because what we're on the verge of now could potentially be leading to our breakout that takes us into the final parabolic phase of the cycle. And in that phase, it will be time to play full out. So I'm sorry that I kind of just left you guys for the last 3 weeks, but I'm going to be with you until the end of this cycle. And if I didn't take my opportunity then, it was never going to come. On that note, if you're not following me on Twitter, make sure you do that because I have been posting there a lot more to try and keep you guys updated as much as possible whilst I was away. And I cover a lot of altcoins on there as well. So if that's something you're interested, be sure to use the link down below to get to my Twitter account because there are a lot of fake accounts out there. So in order to get the real one, you need to use the link down below. Oh, one more thing before we get into the Bitcoin price action. Whilst I've just had my trip away and enjoyed time in Australia, in this video, I'm going to be showing you how you can win a 5-day trip to Dubai to come and hang out with me and see all of the amazing things that Dubai has to offer. But you need to stay with me till the end of the video to learn about that. So don't you go anywhere. Let's get into it. Starting on the daily time frame. You know, I know it's been a while, but really not much has actually changed here since my last videos. I did talk about the expanding wedge formation that we had going on, and we are still in that currently. We do have some good news that has happened since my last few videos, and that is that we do have this W formation and we did break out, and that W did actually create a higher high in comparison to the center peak. After that happens, we look for a retest to validate the W, and it does look like all of that has happened so far. And so the two entries to go long was on the second peak of the W and then the retest of that W formation. On my prior video here, you can see that I had marked out this zone as an area to look for price to return to in order to get a long position. We know now that that has played out. And then on the last video that I've done on this channel, I actually said as price was moving through here that I wanted to see it push up, create the higher high, then come back into this liquidity zone. So when we have a look now at the current price action, that's what happened. The liquidity zone that I marked out was around this green vector right here, and price did return to that area twice with a retest of the 200 EMA twice, which was all really good. Now that doesn't mean that we're actually taking off from here though. I'm going to show you something on lower time frames, but we do have to point out the caution that even though we got this move up through here, it did only create yet another touch to the top trend line of this wedge formation. And we really can't start to flip bullish until we A, break out of it, but B, start to eat into this higher liquidity zone between 66,500 to about 73K. I mean, even if we did do that, that's really still only going to take us to the very top of this range that we've been in since March this year. So really Bitcoin has a lot of resistance above the current price, and it has a lot of levels that it's got to break through where it can reject at any of those levels, but we need to see strength through all of them for us to finally feel confident that the final phase of the cycle is here. So right now I'm cautiously optimistic, but the goal of this video today is to help you get a position should the trend hold if you're not already in a long position. If you miss the second peak of the W and you miss the double bounces off the 200 EMA, your chance may not be over yet. But before I show you that, I want to talk about these lower levels of liquidity that I have mentioned on this channel and also on my Twitter. With the current price action, do we no longer need to be aware of these levels? That's probably the question on everyone's mind. In my opinion, not yet. There is one more thing that I want to see Bitcoin do. And if we fail to do that thing, then these areas are still an area of concern. And the other thing too is the timing. As we know, end of this month, November, it's very many key events coming up that really could cause chaos chaos in the market. We really don't know what's coming until we get to those moments. And what I'm talking about is the end of month economic reports that are coming up. And then on Friday, the 1st of November, we have the unemployment rate. Now, this is the one that could signal a recession is likely if we don't get good numbers here. So that's going to be a very, very important one at the beginning of November. And then finally, we also have the US election. So there is a lot that can happen between then. And there is a part of me that thinks if Bitcoin were to break out and start creating higher highs before the election, it could be a false pump into it. And that would have me a little bit more worried about the price action. Whereas if we just continued this channel of boringness that we've had for a long time until after the election, I think I would actually feel a lot more easy about that. And that does take a hell of a lot more patience, because it does mean we still have, weeks to go. But I would rather that, to be honest with you. Having said that, I am a price action trader, and if price takes off, it takes off, and I'm holding on to my long position. So with all of that in mind, those news events do mean that we need to still keep an eye on these liquidity levels that are below currently, but I am getting close to ruling out that we're going to go there. And the reason for that is price seems to be moving away from this lower liquidity, and it looks like it's, at this point in time, it's wanting to come for the higher liquidity. Let's have a look at high block. So in high block, you can see here that this is the liquidity that I had marked on my chart, what you're seeing in green and yellow. That's the liquidity above price, and these are the few areas left below price. Now, when you have a look at this at a glance, you can see that where the price is currently, the liquidity that is closest to the current price is above it. And usually the market makers are attracted to the liquidity that is closest to the current price because that's the lowest hanging fruit. It's the easiest for them to come and grab. So the more we continue up and move away from those lower levels down here, the more I will start to feel confident that we're not actually coming back for them. However, I maintain my opinion that up until our major news events at the end of this month into the beginning of next, we still need to be cautious, but we can be optimistically cautious. Now let's talk about the chart that has my biggest attention. It's actually the 12-hour chart. And that's because we can see here, this is the daily time frame W formation. We've had this rise through here, and it looks like we're creating this channel that is causing a little bit of a retracement, and it's forming a bit of a wedge formation right now. Now, in a wedge formation, we look for 5 touches. We can see we have them. So far, this is the confirmed wedge. We've got 1, 2, 3, 4, and 5 touches. And we haven't yet broken through that. What should follow if the wedge is going to play out is this part of the wedge next. And so that's why this has my biggest attention right now, because if you're not in a long position and you believe that price is going to break out to the upside, this is the play you're going to be looking for when the market opens this week. Now, how low this higher low goes, it's hard to say and something you're going to have to watch at the time. There's a few things that can happen. First thing as a target is the blue vector area. So you'll be watching between around 61,130 to 62,600 for a retest. And if it creates a higher low there, that will be your signal to enter a long position on the expectation that once that higher low is in and confirmed, we're going to break out next. That's the aggressive entry. Conservative entries wait for a wedge breakout. However, if we're hyper bullish, you may not get a retest. So I personally, when I see retail patterns like this, I prefer to enter within the pattern based on the TBD method rather than waiting for a breakout of the pattern. The other thing I like about this area is that it lines up with all of our EMAs, the 200, the 50, the 10, and the 20. So if we were to come back into this area and hold around there and then get bullish candlestick structure from there, that's where I'd feel more confident that, yep, we're going to break out of this wedge. The other option that could happen is a double bottom within the wedge. And we've got this red vector down here. So if we were to revisit that area anywhere between about 58,900 to 61,300, that would count as a double bottom, and that would still be valid as an expectation that we're going to break out to the upside next, especially because this area that I've marked here at 59,480 is 50% of the daily time frame vector. I'll show you that right here. It's this green vector here, and on this right side of the W formation, it's the only vector that we have on that side. So really, if we're going to have some sort of a retest to give you an opportunity to enter long for those that aren't already long, then this is our only chance. It has to hold this vector. We don't really want to see price go below that. I think if it did, that's where we'd have to reset and make a decision as to whether or not we were actually still bullish. So going back to the 12-hour time frame, that's why I have that area marked. And that would mean that something like this would play out instead, where we came down a little bit lower, say to around the 50 fib level. So keep an eye out on both of those areas as the market opens. And that is going to be your best case scenario to get the lowest price left for a long position, providing you get bullish candle closes in that area in anticipation of a further move to the upside. Now, the reason I say best case scenario is because we may not get that retracement. And that means you have to build a plan for what are you going to do if price opens this week and just breaks out. Sometimes it can seem a little bit too obvious, right? Like if everybody identifies this wedge formation, everybody's going to be waiting for a higher low. And therefore, in order for the market maker to induce FOMO, they might just break straight out. The advantage we have is that this is happening on the 12-hour time frame, which is not a time frame many traders use. So that could be where the trick is happening. However, let's build a plan B. Of course, everything I've told you on this video becomes invalidated if we break below that daily time frame vector. So just keep that in mind so that I don't have to keep saying it with every time frame that we go through. Now, when it comes to the 4-hour time frame for Bitcoin, it's also very telling to me. It's not confirmed yet, so it is something I'm keeping an eye on. But this formation that we have going on here, as you can see, out of this rising bearish wedge, we had a level 1 drop, a retracement, and a level 2 drop. This I covered on my Twitter whilst I was away to help you guys be aware of it. I hope you caught that. But if you have been watching this channel for a while and studying this method, then you will know that we usually expect 3 levels, and at the moment we're only 2 levels. So therefore, why would I be potentially bullish on this when the 4-hour is telling me that I should be expecting a 3rd level drop? The reason for that is because when you zoom out on this level and we draw a trend line from where the bottom of level 2 went, you can see here looking left that this was a very key area of support and resistance quite a number of times. There is an advanced part of this trading strategy, which I've named the Linda reset. I don't know its actual name, but it is essentially a macro reset. And when that happens, you only get 2 levels of drop, and most people miss it unless you happen to know it. Where you can identify that it's going to happen is when level 2 finishes at a key equilibrium. And an equilibrium is where support and resistance meet many times, which is what I just pointed out to you. So there is a possibility at this point in time that the 4-hour time frame is a Linda reset, and that means that we're only getting 2 drops. What will confirm that for me at this point in time is if the price does not return to this red vector, but also if it holds the EMAs, all of these EMAs right here on the 4-hour time frame. It's okay if we retrace back into them, but even then, at these EMAs, I have this green vector too. So this is a really good area for me. If we retrace back and we hold in this area, that's where my confidence will grow that the 4-hour time frame is a Linda reset. And just for clarity, that is bullish. Let's have a look at the 1-hour time frame and the 15-minute, because they're going to tell us where we can potentially get entries for those that do need entries. On the 1-hour time frame, this is how the week played out last week. We had a final damage M formation. They're difficult, don't love them, but we did have our 3-level drop, and this here is a stop hunt reversal, which is also very difficult entry to get unless you're extremely confident. It needs to line up with a lot of things, and in this case it lined up with the halfway point of that vector. From there, the V bottom was confirmed when this price here recovered all the vectors that created level 3. And if you don't get the stop hunt entry, your next entry is EMA retest after those vectors are recovered, which was any of these candles right here. So some people may be long off that. Some people may have missed out on the move entirely. That's okay. If you missed out on the move entirely, now we want to discuss what is happening next. So what's happened on Friday was on the 1-hour time frame, it's just a level 1 rise. We had quite a bit of volume come in, and actually this volume, the reason I'm feeling rather positive, but like I said, cautiously optimistic about the market, is that this volume was very much spot driven. If we have a look over here, when the price started pumping on Friday through here, the CBD spot was rising as well. So Spot buying is positive. It means people believe that it's bullish and this is a cheap price to buy and they were happy to buy. Our biggest thing that we need to work out next week is that buying going to continue? Because it was just a one-day thing. And that's why we have to be cautious at this point in time, because if you know this method, then you know that Fridays are the trap move day. And so we're very much at risk of the move on Friday to the upside being a trap move and completely being taken back on the start of the week next week. And we really need the market to reopen and to see how the price is reacting when the market is open. Even though crypto is 24/7, what happens on a weekend really is irrelevant compared to what happens during the week. So what we want to see when the week opens is we want to see that spot buying continue if we're to continue having moves to the upside. So the 1 hour time frame is showing a level 1 rise, and we're currently in a board meeting, which also coincides with the weekend. So we expect the volume to be low and we expect price to go sideways. If all the levels are to play out on the 1 hour time frame, then next week should be bullish. We should see a rise too, and it may happen after a stop hunt. The reason I say that is because you have sideways price action currently at the time of filming this video. We have sideways open interest and we have sideways volume. So when all three are sideways, usually a stop hunt follows before the next move is made. It actually makes it quite easy to trade, because if the stop hunt goes to the upside, if it breaks up above this range, then price will then follow through to the downside, and that's where you might get that higher time frame retracement. But if the stop hunt pushes to the downside, that's your entry signal to go long, because they've stopped out anyone who went short on the weekend, and you may have to act quite quickly in order to catch that. And I'm going to show you how to do that now on the 15-minute time frame. So this was something that we were looking at in Discord, but it was a trade I showed might happen and a trade that I said even if it happened I wouldn't take it. So I'll explain it to you now. On the 15-minute time frame, our three levels did play out on Friday. How do we know that? We know that because this move to the upside here, which was the V bottom, that broke the 50 EMA with a vector. So that qualifies as a level 1 rise. We went into a board meeting right here, and then we went up through one more time through UK, and we had a volume spike through there. So that counts as level 2. Level 3 then followed through to close the session in US, and we had a volume spike in US as well. So that is how you count your 3 levels right there. Since then, we've been in the weekend sideways move, and what we can identify at this point in time is that we've had 3 attempts at the same level, being around the 63.3 kind of area. Now, when you have 3 hits to the same level after a 3-level rise, that is where you can get a reversal. But just bear in mind that this is the 15-minute time frame, so it wouldn't be a huge reversal if it were to happen. It could just be, like I said, something that would equal a retracement on a higher time frame. So for me, I didn't really want to take this trade because I'd rather concentrate on that higher time frame retracement and add to my current long positions if I get what I want to see when the week opens. But what I was putting out to my Discord was that this is the area of interest right here. After 3 hits to the high, you look for a lower high. If there is a lower high, then we would expect the price is going to break down. And as we can see through these candles right here, we got basically exactly this, which was prior to me drawing this out for them. But we did get that rejection right under the area of interest. Since then, we haven't gone anywhere. As you can see, this is just sideways. This just adds to my reason for not wanting to take this trade, even though so far it's done what I thought, giving us that lower high. I would just rather miss out on this because I just don't think it's going to be the bigger trade worth waiting for. But in saying that, the rest of this trade could still play out. So we have had this drop through here. That is your level 1 drop. We've had a retracement, which is a lower high. We would be waiting for level 2 and potentially level 3 if that was going to play out fully. However, in saying that, we are still in the whole weekend trap box, which is drawn from the lowest point the price has gone to the highest point that it's gone within the weekend after the US session close, which you can see is the last gray dot right here. So longing or shorting within this range is really quite risky, because this is the reason it's going sideways is because retail are guessing right now. There's no trend here. Okay. There's no higher highs and higher lows and all that sort of stuff in order to open a position. So retail are guessing a position, and that's what the market maker needs. So the more people that open trades in this consolidation, the more leverage that gets built up in the market, and the more the market maker has come market open to give that stop hunt that we talked about, take them out, then make the next big move. So the fact that I'm seeing the sideways price action and sideways open interest and sideways volume, and that tells me, Annie, you should expect a stop hunt before the next move is made, tells me don't make yourself part of that, because you can't at this point in time guess which way it's going to be, and you might be a person who ends up getting stopped out. Wait for it to happen. If we're lucky enough and everything goes the right way, it will happen, and then react at that point and make your next move then. So that's what I'm personally waiting for. Now we're going to take a look at the heat map orders to see if there's anything giving us a hint. But before we do, let's talk about this trip that you can win to come and hang out with me in Dubai for 5 days. Thanks to Bitunix, we have an exclusive Bitunix trade travel chill competition happening right now, where 5 people will have the chance to win a trip to Dubai, all expenses covered. That is your flight, your accommodation, and all of the activities that we're going to do. I'm really excited about this one. As you guys know, I've moved to Dubai a couple of years ago. I love this city and I would love to show you guys around. This competition is exclusive to the Trade Travel Chill tribe. So what that means is that you need to create your Bitunix account using the link in the description of this video. And once you've done that, you'll also see the link to enter this competition. Once you've created and funded your Bitunix account and entered the competition, you can also get access to our Discord, where my team are sharing their trade alerts for the duration of this competition, because we want to do as much as we can to help you be one of those top 5 winners. So the instructions on how to get involved are in the description of this video. Be sure to check it out. Now, when we look at Trading Light, it's pretty empty right now. There isn't anything significant above price trying to short it back down. There isn't anything significant below price. So it's not giving us a hint of anything, which means we essentially just need to trade what we see. And there are still, surprisingly enough, the 47K orders sitting in Trading Light that have been there for so long. I don't know at this point if that's a hint of anything. It could absolutely just be a trap and have people staying bearish to believe that we're going down there. There also was newer orders opened even lower, down at 42,875, which is somewhere around the yearly open. The yearly open's at around 43 odd, something like that. So we do have people that are still feeling bearish, unless this is a trap. We do have people still feeling bearish, putting in some big numbers at those lower levels. And that just adds to my reasons for telling you to be optimistic, but cautiously optimistic right now, at least until we're through the election.